quick recap now of today's market action. The Philippine Stock Exchange Index gained steam after the latest jobs report revealed that more Filipinos found work. Indices closed mostly higher, led by the property sector. The top advancers were Universal Robina, San Miguel Corporation, and SM Prime Holdings. The peso continued to weaken, hitting another record low for a fourth straight session. It closed at 57 pesos and 18 centavos against the dollar. Let's get more insights on foreign investment pledges, the capital markets, and the weakening peso from AAA Southeast Equities President William Cabangon. Will, thank you so much for joining us on The Final Word. Where is the market headed right now with a lot of headwinds from the weak peso to the Fed maybe raising interest rates again?
Well, Rico, thanks for having me. I think our local market is in for some even more volatile times ahead of us. We've had a very volatile year so far. Our index is down about 7% year to date. It's unfortunate, but I do think that the risks moving forward are still to the downside.
And what are the risks?
The number one risk that we have right now is still inflation. We've seen oil prices come down slightly, but right now what we're seeing around the world is there's still an energy shortage. It's very much top of mind in Europe, for example. And it's now that the winter's coming around, I think the risk is very real that we see energy prices pick back up again.
You mentioned inflation. The numbers yesterday showed for the month of August, it dipped slightly but to 6.3% compared to the July data of 6.4%. And with the central bank continuing to tighten, it has tightened by 1.25% over the past couple of months. Won't this bring inflation even lower?
Well, that's what we hope. But really, I question to what degree the central bank has control over global oil prices, for instance. I think the BSP's moves have really been in defense of the peso and are much more effective in that regard than actually bringing down inflation.
In defense of the peso, but it's at historical lows of 57 pesos and 18 centavos to the US dollar. I mean, even the gross international reserves has already fallen to 100 billion pesos. Do they still have enough ammunition to defend the peso, or will the peso continue to fall to maybe 58, 59, or 60?
That's a tough question. We saw the BSP sort of throw the market a curveball with their last hike, moving off cycle. I think now they're going to have to one up that. Their reserves, as you said, are a little thin, so they can't really afford to be defending the peso in the open market. So I do think that the peso keeps moving lower from here, and the BSP will have to make up for some lost time by raising rates more aggressively.
All right. When you say we could see the peso going lower, what is the outlook of AAA Southeast Equities for the peso in the medium to long term?
Well, I think we see 60 by the end of this year.
Wow. That's a very aggressive prediction, because I was talking to China Bank yesterday and they were saying 58, not 60 by year's end.
Well, we're in spitting distance of 58 now. Just earlier today, we heard from the BSP. They said that they foresee that they will be raising rates by 75 basis points by the end of the year. That's not quite going to cut it, because in 2 weeks we have the Fed meeting where they will already they will already hike 75 basis points. So, you have the US Fed moving that much in 2 weeks versus our central bank moving that much in 3 months. There's going to be a lot of work to do.
So you say a lot of headwinds that will impact the equities market. What about this recent state visits of President Marcos Jr. to Indonesia and Singapore? And he said he was able to collate at least $800 billion worth of investment deals. Won't this have any positive impact on investor sentiment?
I'm going to correct you there. It was $14 billion.
$14 billion equivalent to 800 billion pesos, sorry.
That's right.
That's a lot of money.
That's a lot of money.
Yes. Any impact on investor sentiment?
Well, first off, I would like to remind everyone that these are investment pledges. And ultimately, the barometer to which we will judge these pledges is to what degree they will be executed. So there's still a lot of work to be done with regard to these.
We have to see the cash.
The
cash has to go through the banking system.
Exactly.
It has to get into our kababayan's hands and create the jobs.
That's right. On that note, Malacanang does estimate about 7,000 jobs being created should all these projects come into fruition. So it is still nice to see all of these investments being promised. I personally like that about half of these investments are earmarked for infrastructure, because that's what we like. Infrastructure creates jobs, it increases economic efficiency. That to me is the most exciting part of these deals.
Higher interest rates, falling peso. I mean, these are all negative fundamentals, right? For the Philippine market. Won't this squeeze a lot of businesses, particularly those listed in the markets?
That's absolutely right. I think we're going to see a lot of pain in earnings this third quarter. Hopefully, some businesses have hedged their dollar exposure, although I'm not too optimistic about that given precedent.
So what is your recommendation right now to investors in the markets who are watching us right now? Should they just stay on the sidelines, wait for opportunities, or should they dive into the markets now and stay in the markets for the medium to long term?
Well, Rico, we are well off the lows from the year. We had a phenomenal August. It was the best month of the year, up 7%.
Even though it was ghost month, as they say.
That's true. So, I liken it to our market to be dancing in the club in August, and now it's a bit of a hangover now. I think we have some room to go lower from here. So my advice is to stay out of the market for a bit, because there's really no risk reward right now to being overly aggressive.
Mm-hmm. And what would you say, despite the current market sentiment, where should people who want to at least put some money in the markets, in which particular stocks or sectors?
Well, if you want to be in the market right now, I think a particularly resilient sector is the banking sector. After all, the higher rates do increase their margins, so their business should be doing well. However, the question there is, will borrowers continue to need money?
Absolutely. Why will you borrow money when interest rates are really high and it could go up by another 3/4 of 1%? Thank you so much for speaking to us right here in The Final Word and for your recommendations on the market. William Cabangon, President at AAA Southeast Equities.
Thanks for having me.